Today, we will be going through our work examples on accruals and prepayments. If you have not attempted this question, you may want to download it via the following URL. So, assuming you have given this question a go, let's solve it together. So let's see, the unadjusted trial balance for Popping Program Trading and Patch Services Limited as at 30 September 2017 is shown below. So we can see sales, cost of sales, sales return, account payable, account receivable, building inventory, bank overdraft. Okay, bank overdraft refers to the amount of money in excess of how much you have in the bank that you have drawn out. So in other words, it means that the company here has drawn out $537,620 in excess of cash from the bank. This is a short-term liability. So let's see, and here are the other items. The following additional information was ascertained on 30 September 2017. So let's see, first prepaid advertising was for advertisement from the period 1st May 2017 to 28 February 2018. The unearned repair service fee was received on 2nd September 2017 for services to be provided. $13,300 of the service was provided between 2nd September and 30 September 2017. Salaries unpaid on 30 September were $8,600. 50% of salaries are paid to sales staff, the balance are paid to office staff. Supplies on hand on 30 September was $1,200. Repair service fee earned but unbilled was $5,500. Unearned rent represent advance payment, 4-month rent from tenant. And the company's main activity is in trading of inventory. It also have other sources of income. So first, we are required to prepare journal entries to record all the above additional information for the year ending 30 September 2017. No narration is required. Then we will prepare a statement of profit or loss for the year ending 30 September 2017, as well as a statement of financial position for as at 30 September 2017. So let's start with preparing the journal entries for the above additional information here.
Point 1. Prepaid advertising was for advertisement from the period from 1st May 2017 to 28 February 2018. That is 10 months if you count May, June, July, August, September, October, November, December, January, and February. For the financial year ending 30th September 2017, advertisement was received from 1st May 2017 to 30 September 2017. That is 5 months, May, June, July, August, September. So before we amortize the prepaid advertising, let's calculate the advertising expense incurred. Here, we take 5 divided by 10 multiplied by the prepaid advertising balance, $28,000, which gives us $14,000. The adjusting journal entry for this piece of information is to debit advertising expense and credit prepaid advertising by $14,000. Next, the unearned repair service fee was received on 2nd September 2017 for services to be provided. Only $13,300 of services was provided between 2 September and 30 September 2017. This is a fairly straightforward transaction as the value of repair service earned is stated in the additional information, so there's no need for any calculations here. We will debit unearned repair service fee and credit repair service fee revenue by $13,300 to record the repair service fee earned. Third additional information. Salaries unpaid on 30 September were $8,600. 50% of salaries are paid to sales staff, while the balance are paid to office staff. This is another fairly straightforward transaction as the amount of accrued salaries is provided. We will debit salary expense and credit accrued salary expense by $8,600. This piece of additional information also mentioned that 50% of salaries are paid to sales staff while the balance are paid to office staff. We will come back to this when we do the statement of profit or loss. This piece of information will help us allocate the salary expense between selling and distribution or general and administrative in the statement of profit or loss. Additional information for supplies on hand on 30 September was $1,200. Supplies refer to the small tools or miscellaneous items used in the office. It can include things like printing paper, pen, pencil, erasers, paper clips, staplers, thumbtacks, files, or even the snacks in the office pantry. Anyway, let's calculate how much supply is consumed during the financial year. We take $6,700, the amount provided in the trial balance, minus $1,200, the amount remaining at year end, and this gives us $5,500. The adjusting journal entry for this piece of information is debit supplies expense and credit supplies by $5,500. Next, repair service fee earned but unbilled on 30 September were $5,500. This is a case of accrued income, and the amount of accrued income is expressly stated, so we do not need to do any further calculations. We will debit accrued repair service fee and credit repair service fee revenue by $5,500. Additional information 6. The unearned rent represents advance payment on 1st September 2017 of 4 months' rent from tenants. For the year ending 30 September 2017, only 1 month of rent is provided from 1st September 2017 to 30 September 2017, so we will only recognize 1 out of 4 months of rent revenue. Rent earned is 1 divided by 4 multiplied by $65,500, the unearned rent figure in the trial balance. This gives us $16,375. Hence, the adjusting journal entry for this piece of information is to debit unearned rent and credit rent revenue by $16,375.
Before we move on to part B and part C of the question, I would like to find out what's the adjusted figure for each of the trial balance item. So one way to do it is to use a trial balance adjusting worksheet that looks something like this. You have the unadjusted trial balance, an adjustment column here, and the adjusted figure. You can use any format you want, of course, but just make sure that you can get the correct figures. So I'm going to key in all the adjustments I made just now into this adjustment worksheet. We also have new line items, so I will just key in the new line items here. For example, we have the accrued salaries expense. And let me just check the total before to make sure that my total debits equal total credits. 63,275, yes, they match, so my adjustment follow the double entry rule. So now let me calculate the adjusted trial balance figure. So here comes our adjusted trial balance figure, and yes, they balance. So now we can move on to part B, which is to prepare the statement of profit or loss. So this is a rough format of how the statement of profit or loss will look like. And let's see. First item would be revenue. We will take the sales figure here and we will minus off our sales returns. And for cost of sales, we will put a negative sign because it's an expense. Let's see, here's the cost of sales figure. Now for gross profit, we will just take this plus this. So this is the profit from ordinary sales, $77,880. For other income, let's see, what other income do we have? We have this repair service fee revenue as well as a rent revenue. So this will be the other operating income. And for the selling and distribution expense, let's take a look. We have, and let me just put a minus sign here because this is an expense. We have salaries expense here. Just now I mentioned that 50% of the salaries are paid to the sales staff. So we will recognize half of this as selling and distribution. And let's see, we also have the advertising expense, which is clearly a selling and distribution expense. So that gives us 70,000. And for general and administrative expense, let's see, we will also recognize half of this as our general and administrative expense because half of the salaries is paid to the office staff. And we will also recognize this supplies expense because I mentioned earlier on that supplies expense are small tools expense used in the office. So this is a general and administrative expense. So now let's see, our operating profit will be this plus this finally, finance expense. We look for an interest expense figure here. Yes, there's an interest expense figure here. So our net profit before tax will be this plus this equals $67,155. So here I use the expenses by function analysis. You can use the expenses by nature analysis if you want to. Just make sure that the net profit before tax is the same. Now let's move on to the statement of financial position. So again, this is the rough format of how the statement of financial position looks like. And let's see, we start with the current asset, trade receivable. Let's see, where's our trade receivable? Okay, here it is. And other receivable and prepayment. We have a couple of other receivable and prepayment as we calculated earlier on. So let's see. We will take this prepaid advertising. We will take these supplies. I'm treating supplies as a prepaid expense because in a way you purchase the items first for an expense that you will incur at a later date. As well as this accrued repair service fee. And finally, inventory. So this is quite straightforward because we only have one inventory figure here. And let's just calculate our subtotal, $100,980. And for property, plant and equipment, we'll just aggregate all the non-current assets, and we only have one building here. So the total will be this amount, and our total assets will be this plus this $809,280. Now let's move on to the liability plus equity section. So first, borrowings. Just now I mentioned about the bank overdraft, so we will include it as a short-term borrowing. And trade and other payables, we will include the accounts payable here, and we will also include the accrued salary expense. We will just combine them as one line item here. And the deposits received, we will add all our unearned income. So let's see. We have this unearned repair service fee. We also have an unearned rent. Let's calculate the subtotal. And non-current liabilities, we don't have any long-term borrowings here, so we can just leave it blank. So our total liabilities will be this figure. And for equity, for share capital, we will just use the figure here. Let me see. Ordinary share capital. And for our retained earnings, let's see. Do we have any retained earnings here? No, we don't have. So that means this is a new business. And because it's a new business, it will not have any retained earnings, so we will just use the profit before tax figure here. So our total equity is this amount, and the total liability plus total equity $809,280, which is the same as the total assets here. So that's all for this work example on accruals and prepayments.